you're watching Closing Trades, where we're tracking the last lap of the market today. I am Snehi Shah. Let's take a look at the way the markets have panned in today's trading session. Well, we did see a mild bit of a recovery from the day's low, but all of that has been bought into. That simmered down clearly. We're right now at the lowest point of the trading session, with 0.2% cut coming in on the Nifty, below the 25,550 mark as well. For the sensex too, flattish moves coming in with a hint of a negative bias. 83,400 is where the sensex is right now. You have Nifty Bank that has also taken a plunge today, about 200 points lower on the spot, 0.3% lower. It's Asian Paints that continues its dominance on the Nifty 50 gainers. You have a 4.5% uptick over there. Reliance continues to hold strong, a 1.5% uptick over there, with M&M, TCS, Wipro joining that kind of a surge on the Nifty 50 gainers side. On the flip side, you have Grasim deeply under pressure, a 6% cut on that stock. Hindalco on the back of weak Novelis numbers, a 6% cut over there as well. Followed by Adani Enterprises, Power Grid, Eternal, 3% lower for Eternal. These are some of the stocks that are in focus as we speak from the Nifty 50 group of stocks. If you take a look at the advanced decline ratio right now, it's deeply skewed in the favor of the declines, and that ratio is not looking very optimistic for the market, because if you take a look at the top 5 Nifty 500 losers, that list continues and is very long. Netweb Tech is lower by 8%, Delivery seeing a 7% cut, BEML lower by 6.8%. ABFRL, Blue Jet. Remember, Blue Jet was locked in upper circuit yesterday. That is seeing a sharp knock today. So that is something that's not looking good. On the flip side, top gainers, Reddington is up almost 14%. CCL Products on the back of strong number and cooling coffee prices is up 11%. Astral Shipping Corporation, Paytm, Manappuram Finance, all of these stocks continue to do well. So that is the texture of the market right now. And we have Kunal with us in the studio. Let's try and understand a little bit of this. Kunal, you did say that 25,500 could prove to be a support level in the morning, and we're very close to that mark. Your reading on the way this expiry has shaped up so far?
Yeah, it's been a disappointing start to the November series, frankly, because the handover to the October series to the November series by the end of the October was extremely positive. I think we rallied up almost 1,500 odd points in the previous expiry, and then the expectation was that maybe the markets could go into a zone where the start of the November series could be on the bullish note. But it's been a little difficult the last 2-3 days, specifically for the expiry. Now I believe that at current levels, my expectation is that we could be looking at the index just about trying to find some support at 25,500 mark. The only concern for the market so far is lack of sector participation. So, like what we were discussing over the last couple of days, there is some weakness which is emerging into the banking names, some weakness which could emerge into the PSU banking stocks, and then a prominent weakness which is there in the private sector banking names. I think that's the bigger overhang for the markets, which could still play out over the next couple of days. So I think on the back of this, I would expect maybe a lull kind of a price action for the indices, but the kind of market breadth which we are seeing today indicates that there is more selling in the stocks rather than more on the indices.
Okay, so that's the reading of the market today. This expiry not shaping up very optimistically for our markets. But while we're talking earnings, let's interact with the management of NIIT Learning. We have Mr. Vijay Thadani, the co-founder of NIIT Group and vice chairman at NIIT, joining us. Mr. Thadani, good to be speaking with you again. Let's talk about your financials. The revenue for NIIT Learning has grown 20%, but EBITDA margins have seen some weakness. They've dropped. Could you elaborate the points behind this margin compression and your outlook going ahead?
Yeah, so I think the most important thing I want to say is that in a period of very high uncertainty and a lot of volatility in the market, we have grown 20% year on year and 5% quarter on quarter overall basis, though backed by the small acquisition which we added during this quarter. Even on an organic basis, it is 17% year on year and 3% quarter on quarter. EBITDA in absolute terms has grown by 3 crores this quarter on a year and 1.5 crores on a quarter on quarter basis. However, as you rightly said, the margins look less. However, they are on the upper end of the 20% margin, which is what is our baseline. And product mix changes do make this go up and down a little bit from time to time. So I think overall the fundamental performance, in fact, has strengthened and is on the top end of our guidance. In fact, a little beyond the top end of our guidance, and that makes us feel very nice. I think the constant currency revenue is, as you have rightly pointed out, is 14.5% and 15 and 3%. That's perfect there. Yeah.
Right. So on this note, Mr. Tharani, would you be okay to revise your guidance upwards right now, or are you comfortable with where you are?
I think our guidance at this point of time is aggressive enough, and we would like to stay with that guidance. I think I need to add to that, though we strongly feel much stronger than before because we added 3 new MTS clients. In fact, with the acquisition, we got 7 more. So we now have 104 MTS clients and a revenue visibility of 409 million going forward, which all make us feel very nice. At the same time, the volatility in the market is still there. And I think we would therefore like to continue with the guidance that we have given so far of 10% plus growth year on year.
Okay, so sounding optimistic on that note. Yes, Mr. Tharani, sounding good. Let's talk about your revenue mix by sector. I can see that the revenue from technology and telecom and energy, BFSI, all of that has gone up. On the flip side, there has been a little bit of a cut from management consulting and professional services. What is your outlook on what your revenue mix could look like going ahead, and which verticals could be the key driving factors?
Yeah. So technology and telecom is the order of the day, and therefore you're not very wrong that is growing fast. And we are anyway the most preferred partner as a training partner for technology and technology companies specifically. So that is going strong. I think the sector which is gaining momentum is industrials. And in that, we have actually bundled 2 or 3 parts, which were smaller parts. And industrials is more than the conventional industrials to which we have added energy and made sure. So manufacturing and all these will also contribute to that. So that's definitely a growing segment. Overall, I think the large enterprises, there are 2 themes which are driving their usage and consumption of training. One is cost management. So they want to make sure that they are able to deliver much more with the same workforce. And the second is the big transformation which is taking place with technology and specifically with AI. We have a pole position in AI-enabled learning or AI-enabled learning and transformation of learning and development function. And I think we are very, very strong there. This quarter, our AI-enabled learning contribution has been nearly 10% of the revenue. So I think that absorption is giving us a lot of confidence that we see positive themes going around. And therefore, that may be across the board. Pharma, life sciences will definitely be continue to remain a strong segment for us. BFSI is and will remain. Technology is moving fast. And I think that you were asking what are the newer sectors. I would say industrials is the new sectors.
Okay. And Mr. Tharani, you did speak about the acquisition of the MST group. If you could help us understand by when this acquisition will start being revenue accretive?
Okay. It is already revenue accretive.
Okay.
We concluded the acquisition on 9th of July, and I think they've hit the ball, they've hit the ground running. In the 20% growth that you see year on year or 5% quarter on quarter, there is a contribution of 2 to 3%, which has come from the acquisition itself. And the acquisition over the year will not only be revenue accretive, it will be profit accretive, and hopefully it will also be EPS accretive.
Okay, sounding optimistic on that note, Mr. Tharani, we'll let you go. Thank you once again for your time. Always good to speak with you.
Thank you very much. Thank you.
Okay, viewers, so that was the management of NIT Learning, sounding optimistic on the guidance that you've given right now, and saying that the MST acquisition could start being top-line accretive and EPS accretive very soon. But on that note, let's once again shift focus to the market. And Kunal, the weakness that we've seen in Nifty Bank, so far we've seen some show of support coming in from either private or PSU banks, but today none of them are doing any kind of heavy lifting. It's in fact Reliance that's trying to pitch in over here. You're reading on Nifty Bank and Reliance both?
Yeah, I think on the Nifty Bank, we anticipated this, Snehi, and we were discussing this also, I think, yesterday, Tuesday and today morning that there could be a higher probability that the PSU banking stocks could start to underperform, and of course the private sector banking stocks could get a little bit more weaker, specifically the likes of ICICI Bank and Kotak Bank, which have been the key gross underperformers in this leg of the price correction for the private sector banking names. So that overhang, I think, could still remain for the index and for the banking index, and that's why you might probably expect some peaking down in terms of the price action for the Bank Nifty. We were at 58,500, a short mark for the Bank Nifty. We've scaled down almost 800 to 900 points so far on the banking index based on these kind of data points. So I believe that that kind of a moderation could continue for the next few trading sessions. But it's not as if that the structure is very, very weak for the banking index, that one has to be a little bit more perturbed. It's just that you are going through a natural phase of correction because there is lack of participation from the sector, from the stock specific front within the banking index, which is making the markets a little bit more consolidative. Coming to Reliance Industries, I think it's been a fabulous start right from the word go for Reliance Industries. In today's session, the stock opened up just close to that 1490, 1500 range on the spot levels, and then I think it's been maintaining this kind of an uptrend throughout. One of the higher contributors, for the index today on the positive side. My expectation is that we could be looking at a breakout of sorts. The best part is that the oil and gas sector, the Nifty oil and gas sector, has come back into a cup and handle formation on the weekly chart. So if Reliance shows more strength over here, we could be looking at an emergence of a new sector which could head towards a strong breakout on the weekly basis.
Okay, and Kunal, amid a market like this, where are you placing your bets? Anything that's looking good on the stock-specific basis?
Yeah, there are a few names which are doing fairly well for itself. One of them, of course, is Paytm at current levels of 1300, 10, 15 thereabouts. So I think that's a stock which I'll be bullish on at current levels. Would look out for, say, 1355 as an immediate target on the upside, and stop loss closer to 1295 for Paytm. The second would be a buy on PI Industries. This could be an interesting breakout candidate. 3750 is where the stock is trading right now. It's a range breakout for PI Industries. The stock has come out of almost like 1.5 odd month of a ranged pattern for itself. So that could indicate we could be looking at a swing upside. 3850 could be an immediate target for PI, and stop loss at 3700.
Okay, so those are the stocks that Kunal is liking at this point. But on that note, we'll slip into a very short break and talk more stocks specific action and tell you more about where the markets could be headed for the rest of this week on the debate over whether regulators should take a stronger stance on inflated valuations. Listen in to what SEBI Chair Tuhin Kantapande had to say on the same.
इनफैक्ट ट्रांसपेरेंसी के बारे में सभी सोचता है, हम डिटरमिन नहीं करते वैल्यूएशन को। ये तो आईज ऑफ द बेहोल्डन इन्वेस्टर है। दिस इज मार्केट में ऐसे इंटरवीन नहीं कर सकते जिसमें हम पुराने सिस्टम में कंट्रोलर ऑफ कैपिटल इश्यूज में ये डिटरमिन करने लग जाए कि शेयर की कितनी प्राइस होगी। शेयर की प्राइस मार्केट तय करेगी डिपेंडिंग अपॉन द अपॉर्चुनिटी, और उसमें सब कुछ फ्री है। हमारा सेबी का जो मेन रोल है कि उसमें डिस्क्लोजर जो है वो रोबस्ट होने चाहिए। और हमने तो फॉन्ट साइज तक तय किया हुआ है कि कितने में आप फॉन्ट में बताएं और कंपैरेटिव्स दें। इंफॉर्मेशन एंड डिस्क्लोजर पे हमारा जोर है, बाकी की डिटर्मिनेशन मार्केट है। सी कैपिटल मार्केट हैज टू डिटरमिन व्हाट्स द प्राइस।
Okay, that's the word coming in from the SEBI chair on the kind of subscription that IPOs are seeing recently. But on that note, let's shift focus and get into a conversation with Mr. Mukul Kochhar, the head of Equities and Investec Capital Services, joining us on the show. Mr. Kochhar, hi, good afternoon, and thanks so much for your time. Give us your sense on where do you think the markets are headed and what could be the next lever of growth? Could it be a manufacturing-led growth that we could see, or now on the back of the GST cuts, could the growth entirely be consumption-driven?
Thanks a lot. Thanks a lot for having me on the call. I think the next leg of growth will in India be manufacturing led. We are already a very large services economy. We are a very large consumption economy as well. So next phase of growth, I think, will come with a bigger contribution from both investment and from manufacturing. The trigger for that, I think, will be the US trade deal, followed by the EU trade deal. But the US trade deal, of course, is more important for reasons that US will be a cleaner deal where we will get most likely some preferential treatment versus China. So that opens up the market better to India for trade versus any other market, I would say, right now at present.
Right. And Mr. Kochar, on that note, where do you expect the US-India negotiations to head from here? Because we've seen the kind of news that we're getting between the US and China deal. Do you think India could be headed along the same path where our tariffs could come down to maybe just 10 or 15%?
See, I won't be able to handicap or comment
Sure.
on exactly what is going on. As investors, we tend to look at information and try to see whether the market is being over optimistic or less optimistic and try to sort of take probabilistic calls. Since July, when this trade treaty started getting into trouble, our stance has been that this will take longer than the market expects. And, at certain level, optimism that it will happen quickly or will happen in a form which is 15% tariff, one should not assume. Yeah, I think there is substantial risk to those assumptions. Having said that, if the deal happens, it is very positive for India. The one small thing I will sort of, mention is that till the time the deal does not happen, Indian capital markets are at risk. And let me elaborate on that a little bit. Our external situation is precarious. Right now, it is being managed by the RBI with intervention in the foreign exchange markets. That can only happen for so long, and that can happen and be effective if the dollar is weak. If the dollar starts strengthening, then RBI's effectiveness in managing the currency will be lower, and we'll see some reaction there right away, I feel. So while the deal may happen, I think if it takes longer, the longer it takes, the markets are at risk.
Right. And Mr. Kochar, amid a market like this, where there is a little bit of correction right now, there is not much certainty in terms of our trade deal going ahead. What are some sectors that you're positive on right now, and where are you practicing some caution?
So we're positive on banks, and that is one sector that we'd identify will do well if the trade deal gets delayed, because it actually sort of has an impact on how quickly RBI can cut rates. And we thought that the market was being very pessimistic on margin outcomes in bank, which has actually turned out to be not the case. Yeah. So that is a call that we maintain. We also are, and by the way, there are good stock picks to be had across the banking space from private to public sector. Then automobiles, specifically two-wheelers, is a sector that we like. We like the defense sector too. There's some large government, players there who are monopolistic and have substantial runway for growth, which despite the run up still make a lot of sense. And there's valuation comfort. We like certain players in the healthcare sector, diagnostics, etc. So there's enough play there in the market, but I've highlighted the risk before as well.
And when you say banks, Mr. Kochar, do you believe it's going to be private banks or PSUs? Because we've seen the kind of rally in PSUs. Are you expecting that to continue going ahead, or do you believe it's time for a little bit of a stop and the private banks will take over from here?
So PSU banks honestly have genuine value as a space, yeah. So there's certain sort of characteristics there which one should note. One is they're well capitalized, so they're growing pretty well. So growth is they're not losing market share on the asset side anymore. Secondly, they've in the recent past been especially risk averse. So the risk on the book is actually honestly lower than most private players even. They're not doing any unsecured retail credit, which generally tends to be more risky. So asset quality risk and corporate in India is exceptionally safe credit today with deleveraging having taken place over multiple years. So the PSU PSU bank books in general are exceptionally safe today. I would reckon even safer than the private sector. Growth is in line. They're not losing market share. Growth is sustainable. They do 15%, roughly 14-15% ROE. So I think on a pure valuation basis, it's a very, very good sector to invest in. One, of course, can be selective based on where one finds more valuation comfort. But PSU banks remain, despite the recent rally, a very, very core area of our investment recommendation. In private banks, similarly, we have both picks in the large and mid cap space. Mid caps, there are some very interesting stories that have emerged, and we are sort of including some regional banks, which we are sort of pitching to clients. And of course, on the large cap space, also we have on the private bank space, we have some names that we are recommending. We are not allowed to sort of take sectors, stock specific calls on media, so I would refrain from giving actual ideas.
No worries, the sector-specific call works too. And Mr. Kochhar, lastly, before we let you go, if you could give us a sense on any pockets in the market where you still think valuations are inflated and you would alarm some caution over there?
So some of these new age IPOs, honestly, there's a very, very interesting debate happening. Personally, I feel that one has to stretch your imagination a little bit to get to the value there. So of course, in my opinion, one should be a little careful here. Then on the I think FMCG side, where the market is moving, I feel towards more in fact investment, less staples consumption. They're more saturated, but multiples are high. So there are a few sectors that that way are looking overvalued, and one should be careful.
Mr. Kochhar, that sounds good. Thank you so much for your time today, and thanks for sharing your views with our viewers.
Thank you very much. Thanks.
Thanks a lot. Okay, viewers, then shifting focus from one market expert to the others, let's get in the views from Alok Ranjan, Head of Equities at ITI Mutual Fund as well. Mr. Ranjan, thanks for your time on the show today. Help us understand, given how earnings season has been so far, how is the market setup looking at this juncture?
Market is doing quite okay. The kind of rise we were expecting, maybe we can see as the earnings season progresses further. Till now, I see earnings season doing quite well. It is so far, if you see large cap and mid cap, the earning has been better than expectation. For small caps, yes, there are some weak points. But I think going forward, as the economy picks up, things will get better. But mid cap has certainly done far better than expectation, and large caps are also doing much better.
Right. And Mr. Ranjan, basis the earnings season that we've seen so far, any sectors that have stood out to you particularly? And on the flip side, the sectors that you're staying away from, if you could share that with our viewers.
Metal sector has done quite well. Energy sector has done quite well. If you take especially oil and gas, not about the power sector. And then automobile sector has done very well. Numbers coming are quite good. Of course, aided by the effect of GST cuts and festival season. So these are the sectors that have done well. If you see capital goods, there also performance is quite good and picking up from the slow pickup in the last 1 year. And as far as IT is concerned, it is quite less than expectation. And of course, we know the problem that has happened from the US, several other issues that IT sector has faced. As far as BFSI is concerned, performance is quite good, better than expectation. As far as profit and profitability is concerned, it is under a bit of a pressure, but it seems like that profitability has bottomed out, NIM has bottomed out, and things are going to get picked up from here. And that is why we have seen a good rise in bank books.
Okay, and Mr. Ranjan, if you take a look at the global macros, they seem to be stabilizing pretty well right now. It could be the US, it could be Europe. Do you believe the worst of macro and global headwinds are behind us right now? Because if you take a look at the economy back home and IIP numbers recently, all of that has been shaping up too well as well. So what's your outlook over there?
See, the main thing that is haunting us is a tariff deal with US, and I think more or less it should happen. Our Commerce Minister has already spoken on various platforms that it should happen by November. That is the understanding, and meetings are already happening, and we expect that it can happen sooner than later. So that is the main thing that will guide us. As far as other factors you see, more or less it is quite okay. There is only one thing negative that has happened in the past 15 days, that is Fed has raised a question mark on further rate cuts. Apart from that, US bond yield is quite under control. Right now, as we speak, it is around 4.1, having fallen from 4.7, 4.8 in the last 6 months. And more or less, even on tariff front, the deals Trump has made with other countries, most of the deals have already been done. With China, there appears to be at least a temporary truce, and there seems to be a good understanding with China. So things are looking more or less stable. Of course, unknown would always be there, but things are appearing quite okay.
Okay, and also help us understand from a valuation standpoint, is there any sector that you would recommend entering into right now, anywhere that you're seeing any sort of value?
The valuation is a big question mark, but if you see how valuations have moved in the last 20, 25 or 30 years, definitely we are still at a significant premium. But if you see 5 years average, then valuations have quite corrected a bit. Right now, if you see 1 year forward, Nifty is something like 20.5 times 1 year forward. So I will not say that it is compelling, but at the same time, certain pockets are becoming attractive. So basically, one has to be bottoms up in this market and try to find the pockets which are cheaper, where earning is going to pick up going forward.
Right, and Mr. Ranjan, lastly, when it comes to this entire large cap versus the mid basket, where would your preference lie in that debate?
One has to be bottoms up. Right now, the kind of trend we see in the market, large cap will be the first one to pick up, because that is where earning trajectory seems to be looking better. Mid caps have also done quite well. It is better than expectation. So the small caps will be the last one to recover. But that is where if somebody bottoms up, then it will be rewarded.
Okay, Mr. Ranjan, on that note, we'll let you go. Thank you so much for sharing your views with our viewers, and hope to be interacting with you more often as well. Okay, viewers, let's move on from that. And on a programming note, being denied basic rights, she rewrote history. Huck releases worldwide.
The breadth of the market too indicates downside. Names like Delivery have now cracked 8.5% nearly. You've got Grasim, which is down about 6%. Hindalco, after Novelis' performance, that's down nearly over 5.5% of the futures. And look at Blue Star. I mean, it kind of amazes me that this is the same stock which actually gapped up on open, reacting to its numbers. And look where it's now. It's down 5.5% in trade as we speak. Pretty much a contrast to where it started off trade. Keynes is the other one. That's down about almost 5.5% as we speak right now. Within the Nifty, I think the little bit of comfort that you have on the index is thanks to Reliance today. That stock is holding up 1.5%. Other than that, of course, M&M. Asian Paints is a solid mover today, 4.5% of an uptick, and Interglobe Aviation also going pretty steady with a 1.7% gain. From within the mid-caps, Indus Tower, Paytm, Manappuram and Astral, that's where you're seeing some very meaningful names or other gains come in. But we're still in conversation with Arpit Beriwal as well as Kunal Bothra. Kunal, two charts that I want to pick up here. First, Asian Paints and whether this seems like a decisive sort of move in the stock today. And then Reliance Industries finally moving.
Yeah, so I think Asian Paints is today looks like it's a classical case of a breakout. Something which we were discussing that it's not happened for Asian Paints for a prolonged period of time. But I believe that this could probably be a start where the stock could get back into its own and then at least try and cover up the huge underperformance the stock has shown, not just for the last 6-8 months, but potentially over the last 3-4 years for Asian Paints. So that I believe could be a good start for the stock in the near term. Reliance, on the other hand, I strongly believe that this could potentially be a breakout move for Reliance Industries if the stock sustains this 1500 mark, say over the next couple of days. Because what we are also seeing as a cumulative pattern is the Nifty Oil and Gas Index is now heading towards a classic cup and handle pattern breakout on the weekly charts. So I think if Reliance manages to hold on to that 1500 levels, we could expect that the sector will start to look a lot more attractive. And given the way the markets are or the construct of the market is, we would require many of these individual sectors to start showing signs of strength. So I think in that case, maybe Reliance Industries could be an interesting stock to look out for, but would look out for 1500 as a key pivot point, and the stock holding on to that 1500 mark would give a lot of confidence and confirmation in terms of the short-term trends.
Oh, yeah, it's made it to 1500 on the futures. That's Reliance that Kunal was talking about. But let's hear out what the Finance Minister Nirmala Sitharaman has to say on the sidelines of the 12th SBI Banking and Economics Conclave.
Strategic self-reliance, and finally, environmental but yet mix of energy sufficiency and so on. So environment not just in the cause of green but also self-sufficiency in those very critical essentials for growth. So it will be on these 5 pillars that I would be placing my narrative to say what is it that we are thinking in terms of when we are talking of Atmanirbhar Bharat and also reaching Viksit Bharat by 2047, giving a picture under each of what work has already happened. The call for 2047 Viksit Bharat may have been just a few years old, but the work towards achieving Viksit Bharat through an Atmanirbhar route had commenced even from 2014. So even as I lay these 5 pillars before you and talk about Atmanirbharta in those areas, I'll equally place before you what foundational work has happened in order that what we need to do for the next 20 years is going to be built on those foundational work. So when I talk of economic Atmanirbharta, it means a nation's ability to generate its own prosperity. And that too through diversified production, internal value chains and value chain creations, and sustainable wealth creation. So India is a vast and uniquely diverse nation. There is no single model before us for us to copy or to replicate. And therefore what we are going to do is essentially build on those lived-in experience and also the models which will be adaptable for India's own futuristic growth. So it should be shaped by our own realities. And when I therefore say of economic Atmanirbharta, it will definitely mean food security. It will definitely mean energy security, which will also be a part of what I'm finally talking on, environment-related issues. Giving full steam and full energy for MSMEs because they contribute more than 40% of our economic, let's say the export, also the contribution to GDP through various sectors in which MSMEs are present. And also the labor-intensive and traditional strength-carrying textiles and unique for India, underwhelming exploitation which has happened, the area which gives immense potential for employment, and an area which should have been naturally our strength, tourism. So I will look at these broad-based progress in these areas, achieving across these sectors, and here blending traditional sectors, modern technology, and innovation-based work. So there is definitely too many variables coming into this calculation for economic Atmanirbharta, but that's the beauty of it, and that's where the Samajik Atmanirbharta, which is also one of the pillars about which I will talk, have a overlap. So in all this, and since it's a gathering of SBI's invited guests, the first thing I would emphasize on is financial inclusion. The more number of people who are brought to the formal financial inclusion process, and the more number of people who are going to benefit in their economic activity through banking extensions, the economy is going to be that much more robust. So for that, we need a robust banking and financial ecosystem. That will be my second emphasis. And the third, above all, which exclusively comes to the state government's domain and the central government's domain, is fiscal prudence. So economic Atmanirbharta will be achieved only when we keep all these factors in our mind. So what efforts have gone? Since I started by saying from 2014 itself, there have been a lot of attempts to do the foundational work for the achievement of Vikasit Bharat. You might have heard these statistics before, but I'm just giving you the nuggets. It tells you where consistency in policy, stability in governance, and pursuing every particular money that is going down to the last post, welfare or infrastructure creating, you are looking at taking the money allocated in the budget to the last point. So infrastructure creation has been our major focus in order that our self-reliance really stands on proper footing. So your economic self-reliance is not going to be realizable without adequate and also proper infrastructure. So look at what has happened in the last decade. The capital expenditure allocation has increased nearly 5 times, where it was closer to 2013-14. It was actually at 2.30 lakh crores. And where is it today? 11.21 lakh crores. So that is the proverbial putting the money where the mouth is. We've actually shown it in the last 10 years. And I closely monitor how much actually gets spent much before my RE numbers are fixed. So it is with that seriousness that allocation is followed till the last post where it has to reach. So national highways therefore grew by 60%, and where it was 11.6 kilometers per day in 2014, it has reached 34 kilometers per day in laying of these national highways. So is the metro rail connectivity. 23 cities in India now have metro. Some of them complete and up and running, a few where the work is still on. So from about 250 kilometers, which was in 2014, today India has 1,000 kilometers of metro lines in operation. So if you look at then port capacity, it doubled to 2,762 MMTPAs. Overall vessel turnaround time, which is very important in terms of trade facilitation, has improved from 93 hours to 49 hours now. So we have undertaken countless path-breaking ease of doing business reforms since 2014. I don't need to remind this August gathering that 1,500 archaic laws have been removed. 45,000 compliances have also been removed. The goods and services tax reforms, new generation GST, is something about which we've spoken severally in the last couple of weeks. Essentially focusing on rate reduction, you would think, but I would think rate reduction, yes, but process simplification, classification clarity are also part of this GST next generation reforms. I'm here on the invitation of SBI, so it will be only very proper to say banks have helped in economic Atmanirbharta by aiding financial inclusion and credit creation. So a big credit to our Indian banks. Today we have 56 crore Jan Dhan accounts. So financial inclusion actually getting executed through the banks in the ground. 52 Mudra loan accounts Yojana. 52 lakh I think, and 70 lakh PM Swanidhi loans, creating a large pool of young entrepreneurs at the local level, tier 3, tier 2 level, and they belong particularly to marginalized groups. So social inclusion, compassion, making sure that everybody participates are reflected in these sort of numbers that you see. These schemes have actually democratized finance. and brought economic independence at the grassroots level. Much is spoken about the PLI scheme. I'll just give one pointer. PLI schemes have witnessed exports surpassing 5.31 lakh crores, which is around 61.76 billion US dollars. Would we have imagined PLI schemes, which were launched sometime in the middle of this tenure, PM Modi's third tenure, in the middle of these 12 years, have already yielded positive results, and 12 lakh direct and indirect employment has been generated because of that. So if this much can be said about economic Atmanirbharta, the social Atmanirbharta is the one which I would like to just give you a few pointers to say. That's my second pillar. I said it has to be laid on the foundation of 4 or 5. This is my second. Social self-reliance, like Antyodaya, actually has empowered people who actually individually on their own couldn't have made any difference in getting some more dignity and security into their life and bringing in opportunity. But we need to change from patronage-based support to irreversible empowerment and independence. I think this line is one fundamental reason why we were able to lift out of multi-dimensional poverty such a large number of people. And that couldn't have been realized without the approach of empower people and not really patronize them. So that has actually brought the difference. I would actually say our goal must be a society and people that stand on their own feet, confident, caring, and united. Self-belief and collective strength must replace dependence and helplessness. So what are our efforts towards achieving social self-reliance? The compare and contrast or understand where the foundational work has already happened. In the last 11 years, PM Prime Minister Modi led NDA government has launched efficiently several welfare schemes, and some of which I would like to not just highlight but also talk about the collateral that it has given. 4 crore people have got PM Awas Yojana, data something which all of you all know about. 15 crore plus people have got tap water connections. 12 crore toilets have been built. 10 crore LPG gas cylinders have been given for those who get the subsidy as well. 81 crore people have got free ration. But if this is one set of data, more important and that which appeals to me a lot is the digital public infrastructure enabled direct benefit transfers. And direct benefit transfers may mean immensely a lot for the person who receives money or the welfare whatever allowance directly into his account. It's a brilliant idea for the person because he doesn't lose out on being taken away for middlemen.
Almost a 10% swing from the high to the low today, right?
Yeah, it's a very sharp reaction.
Very sharp.
Yeah, and the volumes are I think one of the highest volumes the stock has shown in the last 4-5 months.
Yeah, absolutely. That's what you're seeing on Blue Star right now. 1814 on the stock price as we speak. Canes as well, which is down 5.5%. Hindalco after Novelis' performance. And Delivery, which is your top loser today, which is down about over 8% as we speak. For Paytm, Indus Tower, Manappuram, Asian Paints and Astral, it continues to, of course, turn out to be a good day, as also for Interglobe Aviation and Reliance Industries amidst the large caps names. But Arpit, what is your own sense on what one is seeing on some of these, buoyant mid-caps and Astral, Paytm, Manappuram, further traction, you think? And can one still buy these stocks even after the move one has seen?
Very good afternoon to all. So if we see the overall market picture, the broader market is in pain, definitely, and selective pockets are still outperforming. However, if you look at the chart structure of particular counters such as Paytm, so if you look at the chart structure of Paytm, relatively the counter is quite strong. So on the monthly time frame, the structure of higher highs is intact from last 7 to 8 months. On the weekly scale, also it is consolidating, and today it is given a range breakout on the daily scale above 1315 levels. So I think from here on, Paytm looks good among the choices that we mentioned, and the stock can head towards 1350, 1380 levels positionally. Having said that, the breadth of the market is weak, so you have to be very much selective. However, look at the structure of Paytm. The start is quite strong with keeping major support around 1290. The stock can head towards 1350, 1380 levels.
Arpit, how are you looking at some of the banking stocks, private banking? Banks can continue to be soft today.
Definitely. So if you see the overall Bank Nifty, relatively Bank Nifty has been underperforming, overall outperforming from last couple of days. If you look at the chart structure of the big private banks, definitely except HDFC Bank, rest of the structure of the stocks are weak. However, look at the chart structure of HDFC Bank particularly. So the stock was in corrective phase from last couple of days, but today it has been relatively resilient, and it has retested this previous breakout zone around 960, 970 levels. So from here on, I think the risk reward looks favorable for HDFC Bank on the long side. With support around 960, the stock can slowly steadily head towards 1020, 1040. Along with that, if we talk about SBI, the stock which has been a huge outperformer within the PSU basket, and the outperformance can continue from here on also. Soon we can see 4-digit figure in couple of weeks. So SBI and HDFC Bank looks on the positive side from here on in the Bank Nifty space.
Any outlook that you have on Asian Paints and Grasim? Grasim paint numbers have been very muted for the second quarter, and I think that's pushing Asian Paints up today. Arpit?
Yeah. So look at the chart structure of Asian Paints. The stock has been a huge underperformer for the last almost 11 months. Finally, the stock is on the verge of a breakout on the monthly scale above 2580 levels. And look at the chart structure. Today, we have seen a gap up opening, but the key level on the upside would be 2620, where the closing is very, very much important on Asian Paints. And if 2620 is surpassed, definitely you can see some bounce back move towards 2800 levels on the monthly time frame. Look at the chart structure wise. Look at the Grasim. The stock was in strong up move from last couple of weeks. However, today the stock is corrected sharply from its all-time high near 3000 levels. So look at the chart setup wise. The next major support comes around to be 2650, and over there that is 200 DEMA also. So I think 2650 will be key level to watch out for. If it fails to sustain that level, we can see some more weakness towards 2550, 2500 levels going forward.
Right. Okay, that's the take coming in on Grasim right now. In fact, let's get in a perspective on some of these names. Of course, what you're seeing on Hindalco today is the rub-off from Novelis' performance. I'm going to take it across to Ashesha and get in an analysis on how Novelis' quarter gone by was and why you're seeing the kind of weakness that you are on Hindalco. Okay, we'll get to that analysis in just a second. But some of the other names which are, buoyant in today's trading session, while of course there is Interglobe Aviation, which continues to hold out. Reliance, like we were chatting about with Kunal, is giving due support. M&M continues its leadership. And today you're seeing sporadically some of the technology names also hold out. Wipro, TCS, TechM, that are attempting some amount of mood. Kunal, but again, we've been tracking the IT moves as well for a while, and it was pegged to be a turnaround story. Has it really turned out to be that way?
No, of course not. I think the larger cap IT names tells you the entire story. When you have TCS, which is at 3000 levels, Infosys closer to the announcement of the buyback price, for itself and TCS and Tech Mahindra, HCL Tech, etc., showing signs of weakness. It just gives an indication that the entire IT index is still into a downward spree as such. It says that the pace of correction for the IT index is not very sharp, and you're seeing those very odd, very gradual corrections happening for the IT stocks. Large cap wise also, I think you see one of days where these stocks go into a bounce back for a couple of percentage points, but then eventually I think you realize that over the next 1 week or so, those bounce backs are taken as an opportunity to try and at least create fresh short positions or to lighten the long positions, and these stocks, they come back into retesting the previous low. So that's the sum and substance of where the IT index, and I believe that this could be the trend for the IT index largely for the good part of the November series.
Kunal, some of the IT stocks, when you just mentioned about it, if you can, take us through some of the companies like a Tech Mahindra, you have Persistent and Emphasis. How are these stocks looking within the IT pack?
So I think Persistent is the only one which has been doing fairly well in the mid-cap IT names, and many of the other stocks like OFSS, etc. I think many of these stocks have grossly underperformed. Persistent, there was a phase where the stock managed to hold on to that 5,000, 5,400 plus levels as a breakout point, moved on to almost 6,000 plus mark very recently, and now you're seeing some bit of retracement or a price cool off happening over here. So it tells you that maybe the prices are just about indicated that it might go into a little bit of a consolidation. But then on a relative strength study, I think Persistent System has done exceptionally well as compared to many of its, or rather most of its other peers. Many of the other stocks like Oracle Finance, for example, L&T Infotech, Mindtree, etc. These stocks have been showing signs of struggle over the last 1 to 2 weeks. There have been traces of bounce back into these stock prices, but largely I think we've seen a pattern of lower highs and lower lows, and that itself indicates that the weakness could probably continue over here.
Okay, that's the take coming in on some more specific names from within the IT pack, which of course continue to be in the weak mode. We'll take a very quick break. When we come back, we'll get you more perspective on the markets. Corresponding loss in the same quarter last year. The revenues, of course, higher by 24%, and the EBITDA margins also seem okay. I don't know whether there is any one-time adjustment though or not, and which is why this significant jump up. But you are seeing quite a smart reaction on the stock price as well. While we dig out more details on JK Lakshmi, or rather JK Cement, we will take it across to Ashesha and find out why, what went wrong with Novelis and how it's impacting Hindalco today.
Well, yes, Novelis reported weaker than expected set of numbers. EBITDA per ton was lower than what the street was working with. But the most important factor that stood out, and which is why the stock is reacting negatively, is the increase in capex for its Bay Millet capacity expansion project. Now, if we recall, about 2.5 years back, they had earlier guided for capex of just $2.5 billion. Later, they revised it higher to $4.1 billion, and now it has risen again by nearly 22% to come in at about $5 billion US. So this is a major negative for the stock, and that is the reason the stock is seeing such a sharp reaction in trade today. Apart from this, as far as the recent fire incident is concerned at one of their plants, the company said that it is likely to become operational by December. It is likely to impact EBITDA and other net cash flow in the second half of this fiscal. Although 70 to 80% is recoverable in terms of insurance, in the short term, this is likely to negatively weigh on company's earnings going forward. But remember, Hindalco will also be reporting its standalone numbers tomorrow. Novelis generates nearly 60 to 70% of its revenue, and that part is already out. But as far as Hindalco standalone India business operations is concerned, that is likely to report very strong set of numbers. Both aluminium and copper prices were on the higher side. They rose by about 3 to 5% on a sequential basis. So higher commodity prices is likely to positively impact Hindalco's standalone numbers this time around. But yes, the stock is negatively reacting today on account of increased capex and lower than expected earnings that the company has reported.
Yeah, the markets is still looking weak with a lot of pressure coming on the banking stock, especially private banking companies. IT is the only sector which is positive as of now, with mid cap also down nearly mid cap down nearly 1%, and small cap 250 down 1.5%. So a lot of selling happening, Kunal, on the small cap and the mid cap front, while index is almost at a flat level because of the expiry which we are seeing there.
Yeah, not really the expiry, I'll say, Saveed, but I think it's more to do with the market breadth, which has been very negative. The overall sentiment today is a lot more disappointed because the Nifty is not being holding on to that 25,700 mark broadly.
2:9 advance decline ratio.
Exactly.
So that's also something.
Yeah, it's weak. I mean, had it not been for the names which are holding the Nifty up.
Yeah, you have the front lines, no?
Exactly, yeah. Which is why, your Reliance, M&M, And yes, the tech
SBI.
names, like you were saying, along with an Axis, etc., they're the ones which are really
And
just
SBI, which is
holding
holding it,
out
actually.
the index. SBI is flat, so it's eased out from there, from where it started off, and so is the case with the HDFC Bank as well. But we've got Sunny Agarwal as well joining in on the show right now from SBI Cap Securities. Sunny, hi, great to have you in ET now. Thanks for your time today. Sunny, what is it that you're making of the market temperament right now, and where so far have you seen any earnings surprises, if any? What's the report card looking like?
Yeah, good afternoon and thanks for having me on the show. I think again, post hitting 26,000, maybe there is a consolidation which we are seeing in the market. But again, what we feel is that earnings this time have been at least in line with expectation or in few pockets better than expectation. So not many negative surprises as such. And most of the companies have alluded to a very robust second half of FY26. So I think earning uptick is something which we are expecting beginning third quarter onwards, and maybe from fourth quarter onwards we should see an earning upgrade also coming through, subject to a US-India trade deal going through during the next 30 to 45 days. Coming to sector-specific earnings, I think again IT I think has been pretty much reported a very good set of numbers. At least there has been no negative surprise. The street was penciling a very bad numbers from IT, and at the same time outlook is relatively better. And on the top of that, in case India-US trade deal goes through, I think there is a probability of upgrade as far as IT earnings are concerned. And at the same time, valuations are also very comfortable on IT side. So IT seems to be one of an contrarian bet which we are recommending to our client. In addition to that, what I feel hotel sector, again, looking at a very robust, seasonally strong quarter ahead, have reported a good set of number. Cement, again, selectively cement companies, despite of elongated monsoon, we have seen a decent set of number as far as cements are, pocket cement companies are concerned. Banking, again, although everyone there was a clear expectation that NIM will continue to remain under pressure. But going forward, the kind of numbers which PSU banks are reporting and the asset quality which they have been able to maintain despite of pressure on unsecured book, we expect that PSU bank will continue to report a decent set of number for next 2 quarters. And again, valuations are very much comfortable over there. So overall, what I feel is that this time earnings season has been in line with expectation, no major negative surprises. And we should start seeing a kind of low double-digit kind of earning growth, maybe beginning fourth quarter of FY26.
Right, okay, that's that on banks. In the meantime, you've got TCI Express numbers as well, wherein the profitability, of course, has come down. The big, I think, dhamaka was really from JK Lakshmi Cement, and that's where you're seeing a very sharp reaction on the stock price as well. Actually, quite a bit of news flow, come to think of it, from the cement pack. I mean, you had the Grasim cement division, or rather actually Birla Opus's CEO actually stepped down. So I stand corrected. Pains are not, one always traditionally associates the Aditya Birla Group with cement.
That's true, but,
the Pains CEO is out and he's joined Britannia.
So that's good news for Britannia. But from a Grasim's point of view, they've been able to maintain a flat growth QOQ for paints business and a little bit widening of the losses in the paint segment. So that's one of the reasons why I think the Grasim stock is a little under pressure. Aside of the fact that you have the leadership also changing from there to Britannia. So Britannia is positive and other things.
I mean, to think of it, this was the biggest threat for Asian Paints, right? Which sort of tipped off the stark underperformance in Asian Paints, which has lasted for over a year now, right? That Birla Opus is going to come in the market, disrupt it, eat into the market share and all sorts of things.
Yeah, I mean, because, the market thinks that, because of the leadership change which is happening at Grasim or Birla Opus, there may be a pause to the competitive intensity coming from
Maybe
Birla.
that's why Asian Paints is up today.
Yeah, that's the reason which is there. But, one stock which is high is Reddington. 8.7 crore shares traded on that counter. The stock is up 16% today. There is a huge volume which is there, and I suspect there could be a block deal which has come in as well, because of which we're seeing that kind of huge volumes which is there on Reddington actually. That's something which is there. There are other stocks which are up today. Exero Tile You have Websol, which is up 10%, Exero up 16%. You have CCL is up nearly 9%. IGI, which came out with good set of numbers, 9% up. EPAC, Prefab, it's up nearly 8.6%. All up on high volumes and volumes which are more than 30-day average volumes. So yeah, so there's a lot of activity happening in the mid cap and the small cap space with respect to buying and selling there. Utkarsh Small Finance Bank is down 12%. You have RS Software, Dishman Carborundum, which is down 10%. Jyoti Structures down 9%. Yeah, so there's a lot of activity which is not getting reflected in the index value there. It's happening in the small and mid cap space with good volumes coming in there.